Very good afternoon, everyone. Welcome to today's uLaw webinar. Today's webinar's topic is Law Office Expense Management. We're pretty much going to talk about the two major categories of expenses that a law firm or a legal firm comes across in their day-to-day business. Today's webinar has been accredited for 1 hour of professionalism CPD credits in the provinces of Ontario, British Columbia, and New Brunswick. So for friends and legal professionals joining us from all these three provinces, kindly do use your Law Society portals, and the title that you would use to gain this 1 hour credit would be Law Office Expense Management. Okay? Today's webinar is being recorded, will be available to you on our YouTube channel, uLawPractice, as early as Monday. I once again request you to mute your phone lines, though, we have muted. Sometimes we've had some technical difficulties in the past. And use the chat window at any time to ask us any questions pertaining to today's webinar. Like every other uLaw webinar, today's webinar has a specific agenda, more or less because of its CPD nature as well. We're going to be talking predominantly about the two major categories of expenses that are incurred by a legal firm, whether it's a small legal firm, a large firm, solo practitioner, multi-law firm. It really doesn't matter. It comes down to these two major subdivisions or categories that you can divide these expenses under. One are the expenses that your firm incurs on behalf of a client's matter. Not just specific to a client, but it's specific to a client's matter. And in the legal lingo, those are called disbursements. Disbursements, in the nature of itself, hopefully based on a well-crafted retainer or engagement letter, gives you the opportunity as a recoverable expense, because this is something that you're paying on behalf of your client as a bit of a convenience rather than the client having to pay for it. Especially if you look at a real estate transaction, there's quite a few expenses that can go along the way that all adds up. So instead of the client having to pay for all of those disbursements, the land transfer tax, all of those little things, legal fees, not the fees, but the different expenses that go along with it, you as a firm, let's say you sign up to pay on behalf of the client, but a well-written engagement letter or a retainer letter would state that those are expenses that will be recovered through an invoice. Okay? The other category of expenses, of course, straightforward, are the business or the office expenses that you incur on a day-to-day basis to keep the lights on, to function as a business. This could be your photocopiers, this could be purchase of paper, this could be purchase of your different computers, laptops, iPads, mobile phones, whatever is important and necessary for you to run your business. This could be your Law Society fees, this could be an E&O fees as well. Everything that loves you, membership fees, other membership sites, office expenses, not recoverable from clients. Okay, so those are the two major categories we're going to talk about and kind of share with you the differences that we believe are pertinent. And then we'll have a deeper dive into what are these disbursements, how do you manage them? And when we talk about managing disbursements, we're talking about first and foremost, how do we enter these expenses as and when they happen? How do we allow you to categorize these expenses as and when they happen so that it's easier for you to reconcile? And at the end of the day, how do you ensure that these expenses have been accounted for, both from a perspective of a law society's expectations as well as from a CRA standpoint? Okay? And specifically talk about opportunities that you have as a law firm, which is very unique to a law firm situation, to pay for these expenses from a trust account if you have one. So paying for these disbursements right out of your trust account, especially if they're actuals, we're really not looking to make money on those. It's one less burden on your end to be able to deal them from the trust account. If you are set up to pay for these expenses using your general account, as you know, you have these two different types of bank accounts, and if you're paying out of your general, what they call as general disbursements, what are those types that you can now pay for? What are the boundaries, rules, and regulations of how you manage them? making sure that you're invoicing, including those expenses or disbursements, invoicing them, and getting paid on time. So the first 15, 20 minutes, we'll of course talk about that, and then we'll then jump into the business or office expenses. These are office expenses such as I mentioned, rent for office, taxes, your LSO fees, salaries even, right? Okay. And last but not least, we'll talk about the expense book, the analytics, in terms of what is expected by the Law Society. And we'll talk about how having a deeper dive, data-driven decision-making around your expenses can allow you, of course, to manage those expenses better. Okay? All right, so let's get started with what is a disbursement. As I defined earlier, it is certainly the act of paying out or dispersing money to pay for expenses that are pertaining to a client's matter or file. So, layman's term, expenses incurred on behalf of your client by your law office. From an accounting perspective, what it really means is that you do need to keep a record in your bookkeeping to ensure that the accounts are balanced, especially when you're spending, invoicing, and recovering that same expense amount. From a Law Society's perspective, bottom line, you are expected to manage and maintain proper bookkeeping, ensuring that the story of these transactions are told in a chronological manner as expected by the Law Society's auditors. From a business or an office expense standpoint, it is certainly paying for expenses on behalf of your office or your business which are not recoverable from your client. From a layman's perspective, of course, these are expenses incurred to keep the lights on. From an accounting perspective, and in a way from a Law Society's expectation, they do have expense book as an expectation, but from an accounting perspective, still expected to manage bookkeeping to balance the accounts in terms of how you spent the money and how you managed the taxes, especially when you paid for that. Okay, so if you're really signed up for your jurisdictional taxes, which is HST, GST, PST, it really allows you to balance how much of taxes you've incurred or received from clients through an invoice, and then balance it with the actual taxes that you've paid as a business, and then balancing it out gives you how much you owe the government back or how much the government owes you. Okay? And I'll, skim through this real quick. Of course, what is the major difference, right, between the disbursement and office expenses? Straightforward, disbursements are recoverable, and when through a well-drafted retainer letter, engagement letter, I repeat that because that's really the basis and the foundation of where you set the expectation that these expenses are, of course, recoverable, right? You're writing it right there so that your client understands that, hey, we're not just paying this on your behalf, you're paying this, we're just helping you through this process, right? But one underlying common element between both these types of expenses, and I would highlight that it's more important from a disbursement standpoint, is the fact that you as an office, legal office, and as a business owner need to have the right tools, the process in place so that you can track these transactions very well within a boundary of a timeline as soon as that particular transaction occurs. Track them, document them, relay them to your client, so include that as part of your invoice in a timely manner, and of course, follow up for payments so that you can recover it and record that payment so that you can also tell your own bookkeeping system that, yes, you have recovered that expense so that it can tell you back 6 months down the line when you're looking for that answer, right? The biggest mistake many law offices make, it's really not so much a mistake, it's just sometimes lack of time management, lack of process, or just doing too many things at the time, is not being able to track document it on time. Yes, it's very much available to you as part of your bank statement, especially if you used your credit card, for example, or if you've used any other means. Those transactions that you have dealt with as disbursements are very much going to stay in your bank statement. But if you've not told yourself what that $185.44 disbursement was for, just human behavior, it's going to be harder for you to reconcile it at the end of the month. And if you've not reconciled, let's say, for a few months, then it's going to be harder for you to recollect what that specific amount was for, which particular matter, unless you write it down and make sure that you make that as a process. Okay? So very important that disbursements are recoverable in nature as expenses, and it's very important that you have the right tools, process, and people in the company who can help track, document, relay, and report the occurrence of these transactions. Okay, so let's get started with disbursements to begin with. How do you manage them? What avenues or different opportunities do you have as a legal firm to manage, maintain, track, record, relay, etc.? As a legal firm, you have the opportunity to manage disbursements from through different financial vehicles. Combination of both, one or the other, or just one. One is paying for these disbursements right out of your trust account, especially if you're in a situation of accepting a retainer. Law firms accept retainers both for the legal fees as well as a upfront, I would say, ballpark estimate, or sometimes you know exactly what you're going to pay for in the case of certain types of areas of practice. And accepting that as an advance or as a retainer, and then paying off those disbursements that were already planned for right out of the trust account. So all the ins and outs comes out of the trust account, especially the fact that if you've paid out of your trust account, then you don't necessarily need to record it in the invoice and wait for the payment. Rather, you record it in the invoice, pass it as an information, and then you have control over transferring the eligible trust transfer if you've got a retainer and general payments. If you have paid it right out of your trust account, you don't even have that issue or tension because the money gets taken out right out of the trust account and it's accounted for already. Okay? The other opportunity is, of course, you paying it out of your general account, and that has two, I would say, subcategories under that. Do you have a retainer and you're still paying it out of your general account, or was this a situation where there's no retainer involved at all and you're just doing all the work, paying all the disbursements up front? Maybe this is a friend, a colleague, or a referral that you know, and you have the leap of faith to know that they will pay you at the end of this whole legal file. Right? In which case, you do all the work, you pay for all the disbursements, relay that in the invoice, and then wait for that payment to come. The first subcategory of the general disbursements is where you actually have a retainer. So let's say you've got $665 as a rounded number that I always like to use, 500 legal fees plus the taxes in the province of Ontario, making it $565. Assuming there's a $100 application fee, that adds up to $665. Even if you've paid it off your general account, all you have to do is do the trust transfer for that $100 as soon as you've invoiced, because that's what's called as the eligible trust transfer. So the disbursement is recovered through that eligible trust transfer if you have a retainer involved. Okay? Once again, these are two different avenues, but what's the underlying current for these two things is to being able to record these disbursements. And there are certain attributes of these disbursements, the nature of the transaction itself. So really, it comes down to record keeping of when did that disbursement occur? How did you as a legal firm pay for it? And what specific was the reason? And this is probably one of the most important self-help that you can do for yourself and your firm, is be as elaborate as possible when you talk about the reason for payment. Okay? Of course, these are the nature of the transaction itself. Then comes the aspect of who was it for. Now it comes down to the client and the specific file or the matter for that client. Okay? These are the top 5 questions when, how, reason, actually 4, client's name and file, who, right? And as we mentioned, we spoke about the general option. And one other aspect, of course, is the timeline or the cycle that you have agreed upon with your client for generating and raising these invoices and including these disbursements as part of those invoices. Depending on the area of practice, depending on the nature of the relationship of the client, you may actually have monthly invoices if it's a recurring retainer that has certain disbursements that are included, and maybe those disbursements change month on month, in which case you may have agreed upon a monthly invoice that includes the disbursements for that month, in which case you make sure that you have those disbursements collected over a period of that entire 30 days or 31 days and make that as part of that invoice cycle. There may be other areas of practice where you've agreed upon as and when it happens, right? I've got this application fee, I paid for it, I'm right away going to, track, record that, and make that part of my invoice. We have law firms and legal firms that generate invoices just for disbursements, even if there aren't any legal fees involved in that particular cycle of that invoice. So it really comes down to your engagement letter, what you've agreed as the expectation for payment, and the expected cycle of that invoice that includes these disbursement costs. Okay? Okay. As we mentioned earlier, there's these two different financial vehicles that you could use to pay for these disbursements, provided you do have a trust account. And we often ask the question, why not pay it out of your trust account? Just giving you the benefits and the pros and cons, of course, of both these. One of the biggest advantages that we feel of using trust account to pay for these disbursements, first is that you as a profession have this opportunity given to you, is to use this trust vehicle as a way of safeguarding any non-payment issues that you may otherwise have with certain clients. So where you take the money in advance, showcase the work that you're putting in, and then get paid for it, right? Now, examples of types of disbursements can come in handy of which vehicle to use for which. Speaking in general, if you're actually just dispersing the actuals, so if you've paid $100 of application fee and you're just dispersing and recovering the $100 from the client, if it's just actual disbursements, then the trust vehicle is a great way to deal with those disbursements because expenses occur right through the trust. For example, a court fee or an application fee, writing a trust check, if possible, is just a fast and easy way where the money is taken out of your trust account and was already accounted for when you accepted that retainer. What that allows you to do is that you don't have to technically recover that expense, right? Because sometimes we feel it was never your money to begin with. You're basically just ensuring that you're showing it as prudently as possible to your client so that they know why that money left the trust account, right? And this certainly reduces the amount of bookkeeping that needs to be done, okay? So if you're a very busy firm and don't necessarily have the time to do all of these transactions and manage and maintain them, then exploring the use of the trust account to manage disbursements may be something to think about. Paying from the general or business credit card. So, the other side of things, a good majority of legal firms today in Canada, as we know, use the general account to pay for their disbursements. It's still slowly but surely shifting, but even today, a majority of them use that. There could be multiple reasons for it, right? There could be the case of where you use your own pocket, where you may have forgotten your general account checkbook or your credit card, and you just have your cash and you paid for, let's say, a certain photocopy, which is part of that disbursements. Or predominantly people use general and business credit cards to capture points. Of course, we'll wait for the COVID situation to figure out how we use these points. But pre-COVID, that used to be a pretty much a viable option where you use credit cards, gain points, get recovered from the client, kind of added fringes, if you will. But, of course, you do realize that with doing that, you have the responsibility to record all these transactions in time, make that part of that invoice, and either do the eligible trust transfer, as I mentioned, or wait for that payment and follow up in time to recover that expense. Okay? All right. When do we recover these disbursements? I may have already touched upon this in my previous slide. This again comes down to, this was one of the important questions that was raised during one of our webinars, and that's why we included it as part of this CPD session. We've had use cases and stories where sometimes disbursements were not paid because it was either delayed or some cases it was ahead of time, and there was never proof to show these disbursements. So you want to be very mindful of when these disbursement costs are relayed to your client. First and foremost, of course, really comes down to the engagement letter. It comes down to that retainer letter that you sign. As I mentioned earlier, every client situation is different. Every area of practice situation is different. So it boils down to what was agreed upon. But the only point of the matter is if you've agreed upon a certain cycle, making sure that you follow through and ensuring that you're able to generate the invoices right on time. Because we've heard cases where, let's say it was in a monthly cycle and you missed that cycle, it was just going to be harder for you to recover the following month. Has happened with some of our clients and has happened from the conversations that I've had with legal professionals. Okay? And more importantly, ensuring that cycle is well maintained also will help you manage your ledgers and journals, right? So think about it this way, is if you've had these disbursements and if you've recovered well within that, let's say, billing, that reconciliation cycle of that month, then you have a better control over the profit and loss of your business, and it has better control over how you reconciled both your trust and your general accounts, despite of however you use the disbursements to be paid from. So, especially from a perspective of a general account, very important that you stay on top of these disbursements, making sure that you make part of your invoice and generate that invoice and send it to your client right away so that you're ready to recover it well within that reconciliation month. We did speak about using trust and or general for paying for these disbursements. And here are some examples of the types of disbursements that are better suited between any of these two different financial vehicles. As I mentioned earlier, if this is based on actuals, where it's a billable or any recovery on expenses purely based on actual, then of course the trust account and the general account are good candidates. But if it's got to be unit rate, mileage, travel time, as well as expenses where you're expecting to have a bit of a profit or a loss margin, whether it's third-party, outsourced consultancy, or recovery of expense with these margins, then the general account is better suited for that. Okay? All right, so now you have done all the due diligence. You've captured the transactions, the 4 questions of when it happened, why it happened, how it happened, or all those 4 different questions that we had. For whom did this transaction happen? After you have completed the capturing of the data, the generating of the invoices, the reporting of the payments, the transfer of the eligible trust, behind the scenes, the story from a financial perspective is being told and being made ready in the form of certain documents that pretty much outline the storytelling. It's really the screenplay of that storytelling, if you will, that happens through these ledgers and journals. And that's what the auditors or anyone who's going to review those documents are going to look for. And there's a certain template that, of course, the law societies Canada have agreed upon that capture the certain aspects and essence of that story that they're looking for certain consistencies and inconsistencies, right? So making sure there's no misappropriation, or making sure that there's a certain discipline that's followed to manage and maintain the credibility of the law society, and ensuring, of course, your own benefit of running a business in a compliant manner. So if you look at the ledgers, and if you look at the fee book and even journals, each and every document has a certain flavor to it. For example, a ledger document has predominantly the components of when it happened, so a date, the particulars for who did this happen to, so the client and the matter, and of course has money coming in, money leaving out that particular account, and the balance, which is very important from a ledger standpoint, is what is the balance as of a certain date, okay? Whereas a journal, of course, has the date when that particular occurred, but it also has some additional components such as the method of payment. So was this paid using a check? Was this paid using a credit card? Was this paid using cash? And the different financial methods of payment, if you will, that could be used. And in today's day and context, it could be debit. It could be many different alternatives that you have. So capturing the method and who you paid this to, and very important, also calculating the provincial taxes that were paid along that transaction. Now you need a system or a process or the right people who can translate all those data entries that you do into these relevant documents that are needed for you to be submitted. And that's where we're going to move on to the next phase to talk about these documents and the importance of them. And we'll do that soon after we finish the second half of the expenses. So keep in mind, all those transactions so far are meant for a client. The disbursements, the two different vehicles of either paying it out of trust, paying it out of general, capturing these on time, making sure they're billed within an agreed cycle with the client, and then at the end of the month, ensuring that you have a certain process that can give you these documents on a need basis to be compliant. Okay, that's one cycle of your business relating to the disbursements, which are the recoverable expenses of your business. Now we move on to the second component of the expenses that are pertaining to your business. And these are the office expenses that are not recoverable from the client, of course, right? It is the act of paying out for the money spent on behalf of your client, on behalf of your business, rather, and making sure that you have accounted for so that you as a business can have a better appreciation, better control over how these expenses are being paid out, so that you can now make smart decisions based on the data that's being given to you. So for example, if you've compared the rent that you've been paying over the last 6 months compared to what you were paying maybe a year back, and you suddenly recognize that the rent that you've been paying has gone up, maybe it's an opportunity for you to reconsider a different location or negotiate a better rate with your landlord. That's just as an example. There's some cases where you can do that, some cases you can't, in which case at least you make informed decisions. You very much are on top of the expenses that have occurred for your business, right? Because that also relates to, of course, your profit and loss statement. That also relates to how much of taxes you would pay for your business. So the definition, as we looked at the earlier slide, really as a layman's term, is these are expenses incurred for keeping the lights on in your legal office. Types of expenses, and this is very straightforward. I'm sure you are privy to this more than I am as a functional legal professional. Office management expenses, that can be right from furniture, stationery. Of course, some of these categories post-COVID don't seem right or don't seem meaningful enough. Of course, that's going to change over time. So maybe you have this new category called webinar expenses or Zoom expenses. That's going to change. Then we're all facing a new normal, but it's all going to be categorized. It's just going to be a different category of an office management expense, right? The Law Society fees, that's going to remain as you pay the Law Society. Maybe there's a deferred payment plan, but still there's a payment to be made. Your telephone bills, paying for that, advertisement and promotion, making sure that the audience still recognize you as a functional and working legal firm even during these tough times. So these are office management expenses. Then you could have other expenses such as salaries for your employees. If you're a firm with employees that you pay salary, bank charges, dividends even for yourself or others in the business, corporate taxes, and of course if you're managing properties, your own property, then property maintenance, things of that nature. Okay? Now, how do you record them? Of course, there's one big difference is when you record these transactions, you're not relaying them to a specific client or a matter. You're recording this as part of your business and expenses. So the question of who is this for is pretty straightforward. It's for your business, right? But the nature of how soon you capture remains to be the same, which is really as soon as it happens. There is no cycle really compared to the disbursements. There's no agreed upon cycle. So it's best in your own interest to be able to capture these expenses as and when they happen, so that it's easier for you to retain the memory of why those expenses occurred, track them, categorize them, make them available to you so that even after 6 months it's clear. At the end of every month, of course, it helps you in your reconciliation, because the general reconciliation is an important component. As much as the trust reconciliation gets a lot of attention, and that's really a must-have, the general reconciliation is an equally important document that gives you more power to realize the money coming in and money leaving your real business, right? In terms of other components of the transaction itself that you capture, of course, you capture the date of the expense, the title and a description for this expense, photocopy, paid it at Staples, paid it at Walmart, the type of expense. So categorizing this helps, because then gives you the opportunity to have a more categorical approach to where these expenses are going, right? Instead of just thinking that these expenses occur. The method and payment, very important. Was this a check? Was this paid out of your credit card? Out of cash? Sometimes, even if it's an office expense, if you don't have the credit card or the checkbook, you may have paid this, in the case of a sole practitioner, you may have paid this out of your own money. In which case, the business now owes you, the individual, that money back. So capturing exactly who paid for it and how it was paid for is very important when it comes to office expenses as well. Who was it paid this to? You could have vendors that you have repeat payments done to. You could have the one-offs where you can still capture who this was paid to. And that is equally important. Capturing them right away. And of course, there's many, with the advent of technology for today's context, and I mention this in almost every webinar, today is a great time to be a legal professional, purely from a standpoint of practice management, bookkeeping, as well as capturing these transactions as when they happen, because there are many tools that allow you to take a quick snapshot or a picture, OCR it, make it available to you, or at least capture that picture, know exactly when you paid for it, import bank statements. That makes it even more simpler for you to do these data entries, right? So take advantage of what technology has to offer to make these steps and process a little more simpler and easier for you. Now, just like how you had certain ledgers and journals when it came to managing and telling the story and the screenplay of all the expenses that occurred on behalf of a client's file, you also have a story document and a screenplay to tell you the story around expenses that have incurred for office expenses, right? So expense book is one such document that really tells a short story. It tells you, who you paid this to, how you paid it for, especially including, if you're paying disbursements from your general account, this is where it's captured, right? This is how you're going to invoice the client and recover that expense. So this would still have that transaction as part of it. Now, jurisdictional taxes, when you pay photocopies, when you pay for a laptop, and you buy this from Best Buy, depending on the province that you're buying this from, or if you bought this from the States, these taxes vary. And it's important for you to capture these taxes. If you're in the province of Ontario, capturing the HST that you paid the government for that particular commodity that you just bought allows you to manage and map how much of HST is owed back to the government, right? And as I mentioned, the expenses and having full control over the expense management gives you full control over the profit and loss statement of your business. So these are some of the documents and storytelling guides that help you understand where your expenses are going and how they directly impact the bottom line of your business. Once again, talking about technology and how it's helping, you do have the right tools. The technology is available that gives you insight. This could be as simple as an Excel sheet which has all this data entry, and you can build your own pivot column tables that give you all this data, to sophisticated practice management systems, to systems that have the whole 9 yards from practice management to accounting to legal accounting that gives you the complete picture of your business's hygiene. And this, especially for a sole practitioner, this is extremely empowering because this level of data is now available to you right on a mobile form, right within your mobile phone, in a format that you're accustomed to using a mobile phone, right? And this, again, going back to having control over those expenses gives you a better appreciation for where these expenses are going and how best you can manage them. Of course, the legal accounting system has the added advantage that it allows you to capture right from the file, managing the trust, the general, as well as the business accounting side of the world, giving you a complete picture of even, for example, an expense book, being able to capture HST paid received, both on behalf of a client as well as on behalf of your office, and allowing you to be better reconciled on a monthly basis. Keeping you, of course, accountable, making it easier for you to understand your own data, and on top of all of that, ensuring that you're compliant from day one. Okay, so with another 20 minutes remaining, we're certainly going to go back and utilize uLawPractice as an example to walk you through capturing these disbursements and these office expenses and then generating these documents so that you kind of have a real feel for what, kind of an overall life cycle of these two major categories of expenses look like. Okay, so let's start with an example of disbursements. We'll create a file. Once again, we're using this as an example. You, as the business owner, have every right, of course, to do your due diligence, your R&D, to find a tool or product, process, technology, whatever it may be, or the right person who can help you accomplish these important tasks. So for purposes of today's demonstration, as always, and I've been using my fixed-use legal professional, Roger Moore, for more than about 10 years now. So we've grown really fond of Roger Moore. We're going to use this as an example to start with adding a client, creating a file, and maybe taking a few examples of trust-based and non-trust-based disbursements. Okay, so let's go ahead and add a new client. And I'm going to say Mr. Kim D'Souza. on Avenue out of Ottawa. And let's go ahead and create a file for Mr. D'Souza. Okay. All right. So we've gone ahead and created Mr. Kim D'Souza, basic information, but I'm going to skip all the conflict checks and doing all that crazy stuff for today. Cutting to the chase, creating a file or a matter. I'm just going to click on the matter button. And let me create a brand new file. I'll use a small claims matter. I'll say it's Kim. This is John. Sorry, keep you hanging in there. So, all right, so we've created this file. Let me go ahead and accept a retainer. So I'll start with that first example that I mentioned. I will go ahead and say new retainer, and I'm going to start with the 665 example. Let me backdate this to the 8th. Let's assume we've got the check deposited into our trust account, the TD one. Can give them a receipt, but for now I'll just move forward with entering that retainer. So whether this is an Excel sheet that you type this into, whether it's a book that you write into, this is the information you're capturing, which is when did that transaction occur? It was on the 8th of June. What was the method that was used to pay for it? And because we're coming in from the file itself, we know which particular file matter this was meant for, right? And we also know the actual amount. So if I go back and edit this, so here's all the questions of when, how much, how was it paid, which bank account was used, the amount, and the client information. Okay? Now let's go ahead and actually docket the legal fees. I'm just going to call it final closure, initial meeting. We'll kind of encapsulate everything in this one particular description. Okay, I'm just going to make this up, but I'm sure you have better ways of documenting exact steps. All right, so I'm going to convert this into a billable time flat rate, $500. I'll hit save. Now you're going to notice, of course, you're going to open up the eligible trust amount. You've got the trust receipt of $665. There's a flat rate of $565, leaving the potential projected balance at $100. It's not yet the case because you've not generated the invoice to relay this information to the client. But I'll add the disbursement on top of this. And instead of paying from a general account, let's say you paid it off your trust account. You wrote a trust check for an application fee of $100. In your system of record, you would pay this right out of the trust or relay the information to your bookkeeping system that you paid this out of your trust, where you tell us the amount, how was this paid, when was this paid, and very importantly, the description. Okay. And who is this for? So you could say Ministry of Finance or Ministry of Attorney General. Where did the money come from? The trust account. You can even print a check for another day. Now, if you notice, you're going to see the trust receipt drop down from 665 to 565. All right? And let me go ahead and generate that invoice and generate a preview or a pre-bill. Again, always doing a pre-bill helps to make sure that you've got the right information to be related to the client. And you can make this eco-friendly within 2 pages as well. So you've basically told your client that $500 plus 65 is the legal fee for all this work that you've just completed within this matter. The amount due is 0, of course. We've done that on purpose. But we basically said you thank them for the $665 that you received on the 8th through that check that they paid, and notifying them that you took $100 to pay for the application fee right out of that trust account from that $665, making your trust receipt $565. Okay? And now from that $565 is what you're going to take the remainder of whatever was the legal fee or any other disbursement that may be involved from general out of that $565 in play, and hence the amount is $0. So for example, if my legal fee was not $565 and let's say it was $400 plus tax, you're going to make this $448, and there's going to be a projected balance of $565 minus the $448. Okay, so it's not $665. So let me go ahead and generate that invoice pre-bill. And now you notice this is $400, $452 with taxes. This remains to be the same. So the trust receipt is still $565. Now $565 is all the money that's left in trust to play with, and hence the $452 subtracted from that leaves you with a retainer balance of $113. Continuing with the same storytelling that the $100 of the disbursement was paid right out of trust and has no implication on any other thing. Okay? I'll go back to that. Now we've just generated the pre-bill, so let me go ahead and actually generate an invoice so that we can close this matter and take another matter as an example for general disbursements. I'll go ahead and generate an invoice. And hit the download button. And of course, the invoice actually has an invoice number, but it's the same piece of information, right? You generate and send this to the client. And now you have, of course, the last step to do is to recover that $565 through the pending trust transfer of transferring the eligible trust transfer of $565. So this is where you'd open up your TD or Scotiabank, whatever is your online banking system, right? You keep that on the side. And again, you can do this in many different ways depending on the system of record that you use. And this is how it's done within the uLaw record keeping. So I'll choose the 565, keeps you compliant so you can transfer penniless or more. And if I did this through a electronic fund transfer, this may be of interest to our friends who joined us today from Ontario. You do have a Form 9-8 to fill out, and it's pre-populated and available free to download. Now let me generate the trust ledger. So these were the 2 documents that we looked at, the ledger and the journal. Okay, so let me go ahead and generate the trust ledger for the month of June. As you can see, all the clients, including the John Does of the world. And here's our friend Kim DeSouza, where it clearly tells you the date of the transaction, what was it about, what was the money that came in, $665. Clearly tells you right within the trust ledger that $100 was taken out as a disbursement, leaving the balance of $565. As I mentioned, balances are a big thing for ledgers as of this date. And as of the 12th, after that eligible trust transfer was transferred, it left your trust balance for this client at 0. Okay, this helps you with your reconciliation when you have to do your client's trust listing, which all adds up to whatever is left in your mixed or pooled trust account, right? Now let me take the example of another client. So let me take the example where it's a payment made right of general account. So I'll say this was a client. I'm going to skip the whole address. Let me just go save and matter. This is for Samantha DeSouza. Of course, if you've done a conflict check, you would notice that there was another DeSouza that you had just dealt with. But we're going to skip all of that for today. I'm going to go ahead and create a matter for Ms. DeSouza, for Sam. And let's just go ahead straight with the same 565, but rather than a retainer arrangement, we'll go ahead and just do the work, pay for the disbursement using the general account, and then generate the invoice, and then hope, again, we'll hope that the payment was made on time, and we'll see how that reflects your overall storytelling. Maybe this was an ATB matter. Okay. All right, so in this particular example, let me go ahead and say on the 9th June, I completed the work. The same thing. I'll say court fee instead of application fee. Are done. And you can see I did not take any retainer to begin with. I'm just going to control and change this back to $500. Of course, I'm using Roger Moore as a legal practitioner in the province of Ontario. Variable in the settings, you could change the taxes and rates to whatever is your jurisdictional tax based on where you are operating. Okay. All right, so there you go. You've got the 565. Well, in some cases, we have clients who don't charge necessarily the taxes for the fees, in which case you can always remove the taxes by making the taxes 0. So you have full control of how you want to charge your client. You can always do a default tax rate as 0. In which case what happens is the taxes are not included, and it's a flat $500. Not recommended, but it's a very pragmatic possibility. Okay? If you don't want that, go back in, delete that off, hit save, and you're good. Now let's add a disbursement right out of your general account, which is really the subject matter for today. And go ahead and say new disbursement. And instead of paid from trust, you have now the option to withdraw this money or relate the information of having taken this money out of your general account. And as you can see, you have a few options, really depending on the nature of that particular disbursement itself. If this was paid out for an actual, so which is the case here, we'll say this is a court fee, taking out the money of $100, making tax exempt. You could say paid court fee online. And let's say you paid this to the Ministry of Finance as well. And this was a direct withdrawal. You could say it was an email transfer. Now there's two components to that data entry. One was dispersing the client, but the other was, of course, telling your own business as to how you pay for it and who you paid that to. So there's the two different categories of expenses were taken care of from a data entry standpoint in that one screen, to be honest. So now you've got the 565 plus the 100, 665, and that's the projected balance, and that's what the money is owed by your client. Let's go ahead and generate a complete invoice, skip the preview, and generate that invoice. In the previous example, as you've noticed, this was a $565 plus $100, where the disbursement was taken out of the trust account. In this case, it's going to be just an invoice and waiting for payment. In this case, clearly it was articulated to the client that no amount was due because they had already paid for it through the retainer. Whereas in this case, clearly you're going to say the amount due is $665, my friend, to Sam. And what is that for? It's $500 plus the $65 for the work put in. And by the way, we actually had a court fee of $100, no taxes. And that's the total amount left. And if there's a client payment to be done, you can integrate, of course. You have tools today, again, as I said, ease of use, convenience, possibilities today, where you can leave this as a PDF attached with a live link for the client to just enter their card number information and pay for that service right away. Okay? Or if it's the old school, someone has just called in, you can go ahead and tell your bookkeeping system that that has happened too. Right? So you could say, instead of trust transfer, I've got the $665 in payment. Even if I put in $1,000, you're going to see it's going to bring it back to $665 because that's the eligible, unless you override this. And let's say they paid you, again, through email transfer. And money got deposited into your general account. Give them a receipt for the payment, very important, so that everybody is prudent and you have a complete record keeping of the exact amount that was paid and the method that was used. Because you don't want the client coming back saying, I paid you $1,000, where's my remaining amount? Okay? Now if I look at my general reconciliation, which it all adds up to, you're going to notice the court fee that came out of tells you that that was withdrawn, right? So if I do my compliance and do my general ledger this time, so the last time we did the trust ledger, this time let me go ahead and do the general ledger, which is typically needed on a monthly basis, but that's after you've done a reconciliation. But for purposes of today's demo, I'll go ahead and generate that anyways, so that you get a handle for how that data entry in its certain form converted into the storytelling that's required. So this was the Kim DeSouza matter where you got the $565 payment. And here's the Sam DeSouza matter where you got $565. So the date, what was it for? The $565 was what was the legal fees. The $100 was the actual disbursement. That was the fees on behalf of the client. And finally, the client paid you through this email transfer of $665 leaving once again the general balance at 0. Okay? And if you could look at my general disbursement, you can see where you've got $100 for the court fee for Samantha De Souza. Now you have the method of how it was paid, an email transfer through the Ministry of Finance of $100 with no taxes. The previous one was for Kim De Souza, which is a Ministry of Finance payment of $300, right? And last but not the least, if you look at your taxes for the specific month, based on taxes received and taxes paid, you're pretty much going to have a single number for a specific time period as to how much you owe the government or how much the government owes you. And here are the two $65 taxes that you just received from Samantha as well as Kim. And here's some of the expenses that you've paid for. This is a combination of course, both office expenses as well as expenses and payments received from the client. Right? So you clearly say this is a disbursement of $26. The $26 was captured. And this is the HST received, HST paid. Okay? And the expense book, which is the last document I'm going to generate for today, as I mentioned earlier, is pretty much the combination of expenses occurred on behalf of both the client as well as the office. And you can clearly see for the month of June, by date, you have Jason Martin, the client. If there's a client-related transaction, you had a disbursement for this particular file, 592157, of $25 plus $3.25 on the 1st of June, adding to $28.25. That was paid out of your general account. And then for your business, so if it's an office expense we categorize as a business expense, you actually had a $200 payment for rent. And there was another expense, a couple of invoices that were raised, a court fee that was paid on behalf of Mary Poppins of $100, telling you the total expenses and the taxes. So once you do have the data in, generating these documents in the format and template needed is a click of a button. But depending on the system of record that you use, of course, this would vary. How you enter the data and how you generate the documents would vary. But at the end of the day, what's important is how soon and how efficiently you can generate these documents in the said template that is expected in the storytelling of the compliance. Okay? So once again, going back to the essence of today's webinar, which is really capturing the two major categories of expenses that your office incurs as a legal office, both around disbursements as well as office expenses. I think I have a question on our office expenses. It's as simple as adding office expenses, and let's say laptop purchase. Pre-tax, I wish a laptop was $100, but it's not. So it's as simple as that, entering it that way, or you can import bank statements depending on who you bank with. That's actually a good question. Sorry I missed that. So you can go ahead and basically import a bank statement instead of having to enter it one at a time, and basically say this particular insurance or boxies was an office expense, right? And automatically it captures the date the amount, the taxes paid, and you can hit submit. And that adds up in the expense book as well. So real quick, I'll go back to that expense book for the month. That laptop purchase, which was missing in my previous expense book, is now added for the 12th of June, including the taxes paid for a total amount. Okay? This way, a single system allows you to capture expenses that are on behalf of a client, expenses on behalf of the office, allows you to, of course, aggregate all of the documentation required for both sides where the story needs to be told. So with that, I'll close today's webinar. Of course, there's quite a large audience. I will open the floor for any questions that you may have specific to today's webinar. So if there's a question around if you pay the office expenses from the general account directly, do we still need to record the expense of uLaw? Absolutely yes, because that's an expense that is incurred. What uLaw does, or any bookkeeping, practice management, legal accounting system does, is capture all the frills and the fringes that I showed you related to that expense, which is around the amount, the taxes, and how it relates to the expense itself, and also how it relates to the overall profit and loss, and how it relates to specific law society documents such as expense book, which is an amalgamation of all your expenses. Right? So if you go ahead and generate your profit and loss, that transaction that happened through your debit card, that is the method through which you paid for it. But why you tell your accounting system that is that the system can then help you reconcile the books for that particular month and give you the true value of your overall revenue and, more importantly, your expenses. Because if you look at the expenses, it's all added up. And that's why it's telling you till date for this month of June, your profit and loss stands at, your profit yearly is at about $1,300. This came about because we knew that the stationery that we just added had a $1,000 reduction, and that's the expense that you incurred for your laptop. Okay, so yeah, it is important that you still tell the system however you pay for it. Yeah, again, as closing notes, today's webinar is being recorded, will be available to you on our YouTube channel. It's accredited for 1 hour of professionalism CPD credits in the province of Ontario, British Columbia, and New Brunswick. And the title of today's webinar is Law Office Expense Management, where we covered the 2 major categories of expenses incurred by a law office relating to your office expenses as well as your disbursements that are client-related expenses. Okay? Please feel free to email us at support@uLawPractice.com for suggestions, feedback on what we can do better, and any other subject areas that you would like for us to cover as part of our webinar topics. I sincerely hope this was your time well spent on a Friday afternoon, and look forward to seeing you in our next webinar next Friday at 2 p.m. Till then, stay safe and have yourself a fantastic weekend. Thank you.